Out real quick. What's up, John? Yeah, definitely. Happy early Christmas. I don't know if we're gonna take any more trades, guys, because I've been looking at the charts and the market's just really slow. I mean, obviously, a lot of people pulled out for the holidays already, so there's not really much to really look at. The thing is, you don't want to enter a trade and then once the market picks back up, it ends up reversing on you, which can happen. So we might be sitting out the the market for the most part. But if I do see any good trades, I'll still be calling them. However, for the most part, I will probably be holding off for the rest of the week unless I see something really good. John's asking, will BD Swiss broker be good to open? So I've heard a lot of bad things about BD Swiss, John. So I wouldn't recommend it. I mean, if you want to try them out, you can. But from all of our previous members from Europe who have used them in the past, they've had really bad experiences with BD Swiss. So I don't think I would ever recommend them. You can probably look online to see reviews from other people, and it's usually been pretty bad with them with regard to their I think what happened a lot with them was their manipulation of price. So I personally wouldn't recommend them, but if you want to try them, I mean, you can. But I think if you do like a simple Google search, you can probably see that that they've had a lot of issues in the past. Let's see. Still waiting for Kendra right now. Kendra's joining for the session. Here to take. Yeah, no problem, John. I mean, if you want to use something that's available out there, I think IC Markets is probably one of the more reputable brokers out there. I can't think of anything else that people use. I think IC Markets is probably the main one that people outside the US use. I personally only use regulated brokers like Forex.com or US regulated to be specific. But yeah, I can't really recommend using BD Swiss because I've heard only bad things from them in the past. Doesn't look like there's really any. Kendra's trying to make it in. Let's see if she can. Okay, looks like we have an attendee here. There you go. Hey, Kendra, can you hear me?
Hey, yeah, Shawn, I can hear you. Can you hear me?
Yeah, I can hear you. Good to go. All right, cool. Sorry, my dog's bark. Kai, come here. Kai.
All right.
Sorry, my dog's barking. I was trying to stop him. All right, I think we're good. All right, cool. So how's your day going?
Not bad. How about yours?
You take trades this morning?
I did not. I was moving around and I didn't even get a chance to put anything in.
Yeah, no, it's probably a good thing because the market's just been like all over the place. Like pretty much this whole week. A lot of people are logging off for the week already for the holidays, so
Hmm.
volatility is low, and the market's just like all over the place with like Trump and COVID and stimulus and all that stuff. So it's probably a good
Right,
idea
right.
that you ended up not trading today. All right, cool. So let's see. Do you have any like specific questions that you have or anything that you want to cover today? Or is it
So,
just,
because I really wanted to figure out how to use the indicators for taking options
oh
um
yeah.
trades. But before we get into that, like with the US 30, I know you use pretty much like 1,500 pips, right? As your take profit. How do you determine your take profit when you're doing like the Forex pairs?
Yeah, so it just depends on what you're applying. Do you have a specific strategy that you like to use, or is there because each strategy will have a different type of way to determine, where you want to take your profit. So depending on which one you're applying, I could be more specific with that. But do you have like one that you normally apply, or is there one that you are more gravitated towards?
Well, I know like the general rule of thumb is like 25, 50, and then maybe like 100 or something like that. And I either use that or I trade like zone to zone.
Yeah, yeah. So yeah, depending on what strategy you're applying, I mean, there's a couple different areas where you can place your stop or your stop loss or TP. So basically, if you're trading the zone strategy and say you were trying to enter this right here because price broke structure, you would basically, ride to the next structure right here for about 100 pips. So that's
Hmm.
where your stop loss would be. Depending on what you're applying, if you're applying something where it's not zone to zone, you can pitch your stop loss at the previous swing, and then you can have your TP, equal distance away depending on how you're applying that specific strategy. So it really depends on what you're applying because it's, if you're scalping, then you're going to aim for a specific price point. If you're swing trading, you're going to be aiming for a specific swing. Or if you're, applying a specific strategy, everything's going to definitely like depend on what you're applying because every strategy is going to require, some sort of different target or some sort of different stop loss. So it just really depends. Like, do you know like what time frame do you like to trade on, or?
Yeah, right. I was about to say that. I like the 15 and the 30 minute because the US 30 is on the 10 minute, and I kind of like the smaller time frames because it seems like it takes forever for like the 4 hour. So I kind of like to get in and get out.
Yeah. I mean, yeah, that's how a lot of traders like usually start out. Like I used to scalp all the time. I used to trade on the shorter time frames, but as I started trading longer and longer, I just don't like to be on the screen as much. That's why I trade on the 4 hour now. So if you're trading
Hmm.
on the 15 or something, yeah, like the 15 or the 10, you generally would want to put your like say if you're entering a buy right here, right? If you're going to enter a buy at this point, depending on what strategy you're applying, one trick that I like to do is I like to just zoom out from here. So I zoom out from the chart so that trading view, do you trade on trading view or do you trade on something else?
Trading view, yeah.
Okay, perfect. Yeah. So you can use this as well. So basically I usually let trading view determine my TP stop loss for me. So I just reset the chart there so it has all the like candles on the chart. And what TradingView does is it calculates the average of the swing and how far price will likely move from this point. So once you zoom out from there, I use a long positioning tool. I just place it right there, and then TradingView automatically plots the parameters for me. It plots the TP stop loss, and then if you were to let this run, you can see it targets it exactly.
Oh,
You can see
okay.
targets it right there, and then it rejects right off it. So you would have hit TP, got out of the trade, and then it would have started retracing on you. So that's one trick that you can use. But there's a lot of different ways to do it. Like that's one way to do it. Another way to do it is to just place your stop loss at the previous swing, and then you can put your TP, equal distance away, something like that. If you were just going to place it there, your stop loss would be the swing somewhere around here. I'd probably round that to about 15 pips. And then same situation, if you let that run, it'd have the same outcome. So it just really depends on how you want to apply it. If you're applying more risk, then you can possibly put your stop loss even lower to the other swing. That's like one way to do it. Another way to do it as well is to use the pivots as well. So you can use the pivots, turn on the pivots right here. And then you can determine where your stop loss is going to be with regard to where the pivot's at. So there's a ton of different ways to determine where you want to put your target, where you want to put your stop loss. But it just really depends on what you're applying. So if you're if you're trading on the 15-minute, you're probably not trying to stay in this trade for too long. So you probably want your TP and your stop loss to be as tight as it could be without being too close. Like, if it's too close, then you might end up hitting your stop loss before it ends up shooting to your target. And you just want to make sure that doesn't happen. So,
right.
Yeah, it just really depends on what you're applying. So if you have a specific strategy that you like to apply, I could probably cater to that more specifically. But if, we're just talking in general aspect, then it would probably be best at your swing, or if you just let TradingView calculate it for you, because obviously TradingView is going to know exactly where you should be placing it, because they pull up all this data right here. So basically it puts it at the previous swing, but then it adds the average true range, which is like, X amount of pips for where you need that cushion in order for it to not trigger your stop loss or anything like that, if that ends up happening.
Yeah, no, I've just been like using the indicators and like the trend meter. So I guess that's the strategy I've been using.
Oh, nice. So you've been using the intraday strategy. Okay, cool. Yeah. So yeah, if you're applying that, I generally like to put the stop loss at the previous swing, or I just use TradingView, to do it for me. And then I think that'd probably be the easiest way. Do you usually just let it run to full TP, or do you like normally close it out early or move your stop loss and profit?
So what I'll do, I'll probably put like 2 or 3 different positions in at different lot sizes. So like the biggest one at like TP1, and then TP2, TP3, and so on.
Oh yeah, no, definitely that works too. Yeah, so if you want to do that, I mean that works. It's pretty much the same thing. It's just if you put in multiple positions, it just makes it easier, so you don't have to go and adjust your stop loss and stuff like that. Yeah, so that's actually a good idea. I usually recommend that they either do that or they move the stop loss, or like choose one or the other, because some people just don't want to adjust their stop loss. So
yeah, and then sometimes like especially if you like just forget like moving around during the day, you're like, oh dang, could have took profit, and then now it doesn't reverse.
Yeah, exactly. That's why for me, I always have alerts set up. Like whenever I send out a signal, I have alerts set up like at TP1, TP2, so that I can make sure that I go and check the, check the charts, because you never really know what's going to happen in the market. Like how it was yesterday with US 30. Like I knew it was going to swing up, and then when Trump spoke yesterday, like I think our stop loss was like literally like right here.
Yeah, it was close.
And then as soon as Trump sent out that tweet and went like and made a statement, it just shot it down, stopped us out. And then as soon as we took our eyes off it, it ended up shooting right back up. So I mean, it happens. We can't really. It could have dropped even farther. So I just took that L, and I'll move on to the next one.
Right.
Exactly. Yeah. Let's see. Yeah. So is there any other questions that you had besides?
Not with the Forex, no.
Okay. Let's see. So do you have any questions about like the indices, any of the strategies, anything that you're having issues with? Because usually like there's something that you might have an issue with that I can probably clear up.
Right. So sometimes like with like the US 30, you wait till, because I wait till New York open.
Yeah.
And then you'll get like the first valid signal. Sometimes what happened is, say it'll signal as a sell at like maybe 10:30. And then I don't know, maybe so on the 10 minutes, so maybe like at 10:40, it'll be a buy. So which one, like in an instance like that, which one would you take?
I would take the first one. So like, do you have an example? Do you know when that happened? Because I can pull it up on the chart.
It looks like.
Yeah, like a specific date, because we can look over and see like what I would have taken in that situation.
No, let me see.
Is it one of the daily entries, or is it
yeah, it was one of the daily entries. Like I was kind of trying to take it on my own before it was called,
Oh, gotcha. Okay.
Just trying to get better at catching it myself.
Yeah, no, definitely. Did you sit in on the session today?
No, I wasn't able to.
Okay, gotcha. Because I figured out something new that I started using to basically eliminate the other losses. So I'll go over that with you as well.
Okay.
It's a pretty crazy strategy. Like it's super simple, but it makes a huge difference, especially with like scalping.
Yeah. Okay.
So let me see. I actually have the spreadsheet here. Let me see if I could pull it up actually, because I was going over this with the live members earlier today, where I had all the trades. Because I went over all the trades, I back tested it, and then I added a little extra to the strategy that we use so that we could avoid those losses. Let me see if I could pull it up, because I have all of the trades locked in here.
Okay.
Back test. Yeah, unless you have the date. If you have the date, we can pull it up. But I have all of the trades right here. So it was in December, right? Or is it maybe November?
For the US 30?
Yeah, the one that you were talking about, the example.
Well, because it happened a couple times, so I don't remember.
Oh, gosh. Okay.
Yeah.
Yeah. So, well, basically how that strategy works is we just take the first valid signal. So like, I'm assuming you're on the East Coast, right? Because you mentioned like 10:30. Okay,
Yeah.
cool. So you're like 3 hours ahead. So 10:30, I think that'd be 6:30 my time. So if I go back to like December 1, let's go back to the beginning of the month right here. I'll see if I could find. All right, so we'll just start with the 30th. Let's go over here. I'm going to mark up 6:30, which would be about 9:30 for you. So 6:30 be right here. So basically, once the market opens, we always take the first candle. So I'm not sure if you were talking about like an invalid signal or if you were talking about something that was valid like this, but we would always take the first one that appears. So, market opens at 6:30. This would be the first one that closes. That would be the one that we end up taking right there. And then we end up setting it to 1500 pips and then pretty much just let it run. So that would have been the first trade of, I guess, the month. I think it was Monday. So that would be the first one. And I can just go through the month just to, show you how I would identify these. But it's pretty much the same thing every single time. So again, right here, this is 6:30. So then we go for the first valid signal that comes up, which would be this one right here.
Mm-hmm.
We take that one right there. We set our TP stop loss to 1500. And then we let it run from that point as well. So I'm trying to figure out like which, I'm trying to find an example of that thing that you mentioned so we can maybe go over it, but I'm not sure.
It was like a couple. So you see how like the two valid signals came up like back to back? Like it was a sell.
Oh, yeah,
signal,
like something like this.
Yeah.
Yeah. So for something like this, well, this usually happens during the Asia session, because during Asia sessions, like when the market is kind of indecisive, it kind of just goes back and forth. So you usually don't see any like direct movements. Like you can see here during the US session, it goes pretty straight up, right? Like it just goes straight up.
Mm-hmm.
And then we enter Asia session right here, and then it just goes sideways. So that's where you'll see it happen a lot. It doesn't really happen too often during New York session. Like we had one right here where this happened, but we always take the first one. The first one's always going to be the one that we take. We don't wait for like some sort of fake out like this to happen. Like this right here.
Right.
This is probably an example of what you were just mentioning.
Yeah.
Kind of like back to back. So we would ignore all this noise because we already took the entry over here. And you just got to stick to like the first signal. We don't wait for the next one because these are going to be like fake out signals, obviously. So right here, price was up. They fake people out to take the sell. And then as soon as people took the sell right here, it ended up shooting right back up like that.
Right. Okay.
Yeah.
Yeah, because especially like because I know when the strategy is like if the trend meter is like green at the bottom and then you get a sell signal, that's like a sign of a reversal. So that's why I'd be thinking, okay, should I, go ahead and pull out or just let it ride?
Yeah, I just let it ride. I've done the data, I've back tested this maybe 5 or 10 years. So, a lot of those fake outs do happen because those are how they trick people into, because like obviously, if you're entering this trade right here and you saw that happen where it was the opposite signal, a normal person that's analyzing this chart would think, oh yeah, that might be right. it might be coming down because we're in a strong downtrend, right? So why would you take a
Right.
buy in that situation? But for us, a lot of people don't have these momentum signals because there's not really another momentum indicator out there that detects these momentum swings. So a lot of people, if they're just analyzing this without, the K2 indicators, they would identify this as, it's probably going to swing back down, right? So for some people, they would enter a sell right here, and then they end up getting faked out because they have their stop loss right here at the swing. The market basically just tricks them to make them think that it's coming down because it looks like it's coming down right here, obviously.
Right. Ending that wick.
And then when you
change in momentum.
exactly, and then when you least expect it, it just ends up shooting right back up to stop whoever took that little fake out right there. There you go. You would have got stopped out. So that's why we always take the first valid signal that comes up, because that's usually going to give you the hint that price is probably going to go in this direction.
Right. Okay.
Yeah. So basically, you just got to train yourself to not get faked out in these and just focus on the bigger picture here, which would be the first signal.
Yeah, I'm pretty sure it's just like a mental thing.
Yeah, no, it really is, because just like I mentioned, like anyone would see this as a sell. If they saw this, even I would see it as a sell. But since I've developed this, right, I've back tested it to figure out if it actually works. That's the reason why I'm able to just trust it. But it's really a mental thing. Most trading is like 10% strategy, 90% mental, really, because it really plays with your mind if you're unsure.
Right. Let me see. Now, you was telling me about how you use the pivots you used to use the pivots to like trade options.
I've used them before. I mean, there's a lot of different factors that you can use for options. When you're trading options, you're usually either trading in the money or trading out the money. So do you trade normal options or do you trade like binary?
The normal options.
Okay, so you trade like stocks, right?
Yeah.
Okay, cool. So do you have like a stock that you're like looking at today or sometime recently? We can pull it up if you want.
Well, Neo, yeah. Okay. I mean, because I just started trading options, so.
Oh, gotcha. Yeah, no,
Yeah.
definitely. So the thing with Neo and the thing with just stocks in general is that they're highly manipulated. So the strategies that we use, they don't necessarily, they're not necessarily going to be respected every time, because if you're familiar with how stocks move, they usually don't respect structure. If something happens, like there's some kind of news event or there's some update with the company, then you'll just see price spike right up and it won't respect any structure. So I personally don't really use the indicators for options with stocks. I mean, you can, but
okay.
it really depends, because like for here, for example, you do see the rejections from these zones here, but stocks move totally different compared to Forex and other indices. I mean, it moves more similar to indices, but still you'll see here that it doesn't really respect these zones. Like for Forex, when price gets near these zones, they usually reject right off them. But if you're looking at stocks, they usually just break right through them. Like if they see something happening, or if there's something that's pushing price in a certain direction, you'll see it like spike up and stuff like that. So if you're trading stocks, you should be more focused on news with regard to that company, or things that affect it more directly, because technicals aren't necessarily as important, with regard to stocks. I mean, you can, like, say if you were looking for a rejection point, like something like this right here, you see a rejection point followed by a sell signal, then you could probably anticipate that it's going to move to the next zone, right? But it doesn't necessarily always play out that way. So, like, which expiration dates do you usually use? Do you use like weeks out, or do you use months out?
I've just been doing like maybe a week.
A week? Okay, cool.
Yeah.
So if you're doing a week, you probably would be on the higher time frame, something like the maybe the 4 hour. So if you're going to do that, you can see here that price moves like very far out, so it's kind of hard for you to really determine where these structures are. But you can use this to your advantage to identify where price is probably going to be rejecting from and stuff like that. So the way that I personally would use it, I would look at the chart and I would see when price breaks structure. So if price breaks structure, you'd probably want to find a strike price that's near that structure. Do you usually trade in the money or do you trade out the money?
I don't know. Like, what do you mean?
It's all right if you don't understand. Yeah, in the money is basically, so here's, for example, I'm going to go and hide this. Basically, if price was above this zone right here, right?
Mm-hmm.
And then you try to take a trade that where you're taking the option strike price where you're basically indicating that price will be above this point, right? This little line right here.
Right.
So if this is your strike price and you're taking a trade that's above here and you're anticipating it to be above it, then your trade would be in the money because, and it's going to be worth less profit because you already have an upper hand. Price is already moving in, that direction. Vice versa, if you're taking a trade that was down here and you're indicating that, price is probably going to be above here, that would be an out the money trade because price has to move from here to this point to get into the money.
Okay, yeah, that's what I do.
Okay, so you do out the money trades.
Right. Mm-hmm.
Okay, so yeah, out the money trades, it's a little, it's more risky. Well, I mean, they're both risky, but if you do out the money trades, it's you never really know what's going to happen in like a week from now, right?
Right.
So the problem with that is it's kind of hard for you. It's really like you're kind of gambling when you're trading like that because there's no way that you'll know if Neo is going to be way up here or if it's going to be way down here at that point. Yeah, I mean, there's a lot of ways to analyze it, but you really have to know how to analyze the chart to like determine like how far it'll go. Like for something like this right here, let me see if I can find an example.
Yeah, because that happened to me with Pfizer. Like, they were announcing that they were going to do the emergency
Oh yeah, the vaccine,
approval.
and it
Yeah.
spikes up like crazy, right?
Mm-hmm.
Yeah, that's why I personally don't trade options. I used to trade options a long time ago, but they're just too. I mean, the thing is, if you know where price is already going, you might as well just trade the actual spot price because you can make money that way. But yeah, obviously you need more money to trade the
Right.
spot. But I'm trying to think of an example here. So an example that I would consider would be something like it would be something where like if you have like a buy signal, like something like right here, like you have a buy signal and then you already have like these you have these like structures that are built right here. You can probably have like your strike price somewhere above here because generally if you have a signal, it's usually going to break in that area. But again, it's just too risky. Like I wouldn't recommend you apply this. You actually have to know how to like read the charts and stuff like that. Because for me, I could anticipate that if I get a buy signal, it's a strong bullish candle.
Mm-hmm.
Price is probably going to be past this strike price. Let's see how far is this? Probably like a day or two ahead. This is about 2 or 3 days later. So because of this, I can understand, like I understand how to read the chart. So I can see that this is going to be coming because we have a rejection point and then we have a bullish signal right here. So if I saw that, I would, take the strike price right here. And then obviously within the next couple of days, it would be above it. But it's a little more advanced. It's not something that you can really, I mean, technically you can learn how to do it, but it's just going to come with practice. You know what I'm saying?
Yeah.
It's not really something that I can just be like, oh, look for this. And then you'll find it because it doesn't always play out that way. Sometimes you'll get like a strong, let me see if I could find an example of that. But if you look here and you see how this was a strong bullish candle. So same situation over here. We had a strong bullish candle down here as well, right? So if I go down to this point and then I try to find the zones down here, you can see that it's kind of the same pattern. So basically we have a pattern right there. You have a zone right there. If I hide these, you can kind of see where it's a break, retest, rejection off this point, followed by a bullish, like a strong bullish candle right here. So if I was to see that, I would identify this as, bullish momentum is coming. So in that situation, if there was a strike price right here, I would take, an option that price would be above here. And then I would catch that as it moves up. So it's kind of something that you kind of develop over time. It's not something that I can just tell you, look for these big candles because it doesn't always play out that way. I'm trying to find a bad example. I'm trying to find a candle where it doesn't break through it. So we have one right here actually. So right here we have a strong bearish candle. Let me see if there's a rejection point. It doesn't look like there's going to be one, but gonna look anyways. Let's see. Yeah, there's no rejection point. This rejection point's too far. These are kind of like patterns that I kind of could just see with my eyes just by looking at it. Generally, if the sell signal came right here, then I would identify this rejection followed by the sell signal. But the thing is, price came down, swung up right here, but there's no structure here, so it kind of just swung back down further. So I wouldn't anticipate this to break below here. I'm trying to find a bad example so I could show you that what not to look for, but it's kind of hard to see here.
Yeah, I know. I've been like watching like some people use like the 3 EMAs to kind of determine like the momentum of the stock.
Yeah.
But they do it on like the 1 minute and the 5 minute and stuff like that.
Yeah, I mean stuff like that is kind of like gambling too. They're usually taking like huge option contracts. They're not taking like one, they're taking like 40 option contracts and they're trying to just scalp it. But in that situation, you might as well just scalp, you know. It's I always find it interesting how people try to trade options like that daily.
Yeah.
I mean, there's a lot of ways to trade options. Like I could literally go on for days because I don't know how you specifically trade it, but there's a lot.
I'm new, so I'm still learning. But I figured, maybe I could use the indicators.
Yeah, I think the main thing that you should probably look out for, this is probably like it's a simple pattern that always plays out for the most part, is just look for a rejection point. If you see a rejection point like this right here, and then it's followed by a signal, obviously, you can anticipate that price is likely to have some sort of bullish momentum move following that. So like right here, you see price break structure, it retests, and then it's followed by a buy signal right here. If you see that, most of the time it's probably going to shoot up to some extent. So like at this point, you could have your strike price. It really depends on where you're holding. If you're holding it for a week ahead, then you probably want it to be 10, 20 cents over here. So when you see something like that, you could have your strike price somewhere right there. But here's the thing, like the banks and institutions that set these strike prices, they put them in certain areas where there's going to be manipulation. Like they're going to put it where another zone's at. So this is probably unlikely. You're not going to see a strike price right here. You're probably going to see a strike price up here or like areas where it's going to be hard to reach, right? So for something like this might work for you depending on where your strike price is. I generally would like to keep it maybe, around 20 cents or something like that, because if you have it too high, like $1 above, it might be impossible for you to reach that point. It's usually like that. If you do a weekly contract, it'll probably be like $1 above right there. And it might play out, but it might not. So let me see. Yeah, it ends up playing out eventually, but you would have held this for, let me see, like 40 days. So yeah, you know what I mean? It's kind of hard to really gauge it. I think the best way for you to do it is because we don't have the strike prices, so it's hard for you to determine where this stuff's going to be. So what I would do is if you see an entry like this, like you see a nice rejection off a zone, and then it's followed by a signal, then I would pull up the strike prices and then just mark them up on your chart. Like put them on your chart so that it'll give you a visualization. So if you see the strike prices like right there, you're like, all right, cool. I just got to reach this far within the next, 6 to 7 days. And if it looks like it's attainable, then you could take that strike price right there, because odds are price is probably going to be above it like that.
Okay. Yeah.
Okay. So that definitely helps. But like I mentioned, unless there's like, you have to be really specific with what type of option you're trading, what type of asset you're trading. Because the thing is, if you're trading something that's not volatile, your analysis is going to be completely different. But just using this little analysis that I mentioned, use identifying the structure and then seeing if it's followed by some sort of signal, this will give you an upper hand already, because you'll already be able to identify that price is going to be going in that direction for like an X amount of time.
Okay. So what would you consider like volatile, like stocks? Because what I'm gonna do, I'm gonna go back and back test, try to see if I can look for these, strike points and stuff.
Yeah. See, the thing with stocks is that it's kind of weird because like one day stock could be super volatile and then the next day could be completely like nobody talks about it anymore. So for you to find stocks that are really volatile, you probably have to like watch or listen to like CNBC or something like that and see what they're talking about. Because whatever is like the hype, that's what you should be trading. Because
Right.
those are gonna be volatile. Like I'm not sure if you like traded Kodak or you heard about Kodak, where like when Trump endorsed it, it was like going around like crazy. And then all of a sudden
Yeah,
it crashed. People forgot about it, and then all of a sudden, like last week, it started shooting up again.
I
So
do. So I
go ahead.
do know somebody that trades like the news for the day because you know how they have like they list like the top movers and stuff like
Exactly.
that. That's how they trade. So
Yeah,
maybe I'll try that.
exactly. And that, yeah, and that's why I stopped trading stocks, because the thing is, it's a lot of work. I feel like the hardest part of trading stocks is finding the stuff to trade, because they're changing like so often. For Forex, I just stick with like certain pairs or even indices. I just trade US 30.
Hmm.
Um, but with stocks, it's kind of a mixed bag. I think you should probably reach out to Felix. So Felix does the stocks, and Samir does the options. So have you talked to Samir before?
I think I messaged him one time before.
Okay, cool. Yeah, because he would probably have better answers for you. Because I personally haven't traded stocks in like 8 years. It's been a long time since I traded stocks. But obviously, I know how to analyze the charts because it's the same thing.
Hmm.
Going from Forex to stocks to indices. But if like more specific questions with like how do you find the good stocks to trade? How do you like analyze these specific things? I probably couldn't help you with that because I haven't done it in so long. And things have changed since then. There's all these new apps. There's like other websites that you can look at to find, these hot stocks and stuff like that. But I think, the place to start would probably be CNBC. Because every morning, if you watch them, I think they start at like 5 or 6. Whenever the market opens, they give call outs for like, what are hot picks for the day. And then you could probably just focus on one of those stocks and basically just take entries from that point.
Okay.
Yeah.
Yeah, I'm sorry. I'm just writing down notes.
Yeah, no, you're fine. I think there's a thing here on TradingView too, where they have, you can also look at this right here. They have like, if you click on this little fire button, it has like hot list, and then you could change here specific things that you want to look at.
Oh,
I usually would go to, I mean, you could use any of these really, because they're all gonna give you either the really good stocks or the really bad ones. So you can go to like percentage change gainers, like if it's really high, and then you can like click on that and you'll be like, okay, this one had some huge like
oh
movement
yeah.
here.
Wow.
So if you're trying to trade this option, if it's super high, odds are it's probably going to come right back down. So this could be something good to trade. And you can do this like pre-market, like before the market opens,
Hmm.
and you can see basically the stuff here that moves. Like if you want stuff that's moving, usually what I would do before when I trade stocks, I would choose the stuff that's losing. So I go to opposite change. I would go to like percentage losers. And then generally, if it's an established stock, like something that's not necessarily a bad stock, like something like QS over here, if it's having like a bad day, odds are if it's an established stock, it's going to bounce back at some point. So
Right.
like that's something that you can do as well. Um, I mean, like the thing with the stocks world is that there's a lot of different ways to identify stocks. There's a lot of different ways to analyze the charts. So it gets a little more complex because there's a lot more moving parts with regard to finding the stock, analyzing it, understanding if whether that strike price is good or not. I mean, the list literally goes on. So I think if you have more, like if you want to focus more on options, just reach out to Samir because he's really good with options and he's good at teaching it too. So I could try to help you as much as I can,
Oh
but
yeah.
like,
No, no. You've been great.
yeah, but like I mentioned, I haven't done this in so long, so I don't really have the best tips for stocks. But that's basically what I would do. I would go to see what's like the biggest percentage losers, or yeah, what else is there? Like gap losers, something like that. You just want to make sure you don't trade something that's like a penny stock, because if you're trading something that's a penny stock and it's losing a lot of money, that penny stock is probably going to disappear at some point. So
Hmm.
it's probably something that you probably shouldn't trade. But if you just look at these here, um, yeah, so percentage losers, I would basically go for like something that's blue chip or something close to blue chip. So maybe something above $50, like Fubu right here. I think, or Fobo. I think Samir was mentioning this recently.
Yeah, he's been calling them out.
Yeah, like for something like this is something that's somewhat established. So it's like at $45. So like basically if you had a strike price that was, somewhere in the range of like here or somewhere where like close to price where price currently is, you can possibly like identify where yeah, there's no zones on this because it hasn't been around long enough. But if it's something that's strong and it's actually moving, you can probably identify where a good strike price would be, like close to where price currently is. Because if it's a good stock, odds are it's probably going to swing right back up.
Now, even like so with Forex or stocks, like do you trade the gaps? I've noticed that over time, like even if it gaps up or down, it usually goes back up to fill that gap or
I,
comes down to fill a gap.
yeah, I personally don't trade that because that's, I mean, you're literally just gambling at that point. Because if you're just trading off people's emotions, odds are like you could get lucky every once in a while. You see people get lucky all the time, but that luck only lasts so long. So I personally don't trade gaps at all because it can go one way or the other. It'll either go up or it'll go down. But let me see if I can find an example where something gapped. Something uh, like this right here. I guess like this entry right here for GN over here, like how this gapped up right here. You're basically just betting whether it's going to go up or down, right? You're not really using any strategy. You're kind of just thinking, which way it would go. And then generally when someone trades the gap like that, they usually have like a pretty tight stop loss. So they'll have like a buy position there, and then they'll have their stop loss kind of tight because they don't want to get caught in any movement. So the problem with this is if you try to trade the gap here and you think it's going to, or actually you think it's going to come down. So usually it gaps up like that, and people try to take the sell right there because they think it's going to swing right back down to correct, because obviously it was in a downtrend right here. So normally someone would probably think, oh, it's in a downtrend, so it's probably going to come back down. But if you end up doing that, you'll probably end up it'll go up a little bit, it'll stop you out, and then you're pretty much out of the trade. So I personally don't trade gaps because that's just gambling, really.
Mm-hmm.
There's no way for someone to predict the news, unless you could tell the future or something like that. But there's really no way to really predict what's going to happen next unless you have some sort of strategy for this. Like for me, even though I saw this gap right here, I wouldn't have taken the sell. I would have taken the buy because it fulfilled one of my, like the K² SR strategy. But I personally don't ever recommend trading news or trading gaps because it's literally just gambling, and it's like a 50% chance that it's going to hit or that it's going to lose. And
Right.
For me, I like to trade stuff that's like quality trades. I like to trade stuff that I have like a good understanding and I have a high probability that it's actually going to hit versus, you just taking a trade and then hoping that it hits, but you don't really know what's going to happen at that point.
Okay. I'm gonna go back and do some testing.
Yeah, because the thing with gaps, like you never really know what's going to come down or come up. Like even right here, like with this gap where it gapped down, this ended up correcting back up. Like it gapped down, corrected back up, but then it ended up crashing right back down. So it's really hard to tell if it's going to gap down or even like right here where it gaps above, and then instead of coming down, it just ends up shooting right back up, or it keeps on kind of pushing farther up. So. Yeah, I mean, trading gaps are exciting if like you're just starting trading or if you're not, like you haven't been trading for a long time. And I've had my time where I like to trade, risky trades like that. And it's all fun and games until you end up blowing your account and you're like, damn, I should.
Right.
You're like, damn, I should have just did it properly. But I do get what you're saying. It is exciting, but the fun can only last so long until you end up getting caught in some bad trades.
Mm-hmm. Well, are you trading tomorrow?
I'll be on. I'm gonna be looking at the charts. I'm not sure if I see something really good, then yeah, I'll take a trade. But if not, I'll probably just be sitting around answering questions and then maybe taking some scalps. But I'm probably not gonna take anything that's too crazy because I think the market is like half day tomorrow, so I think it closes around noon,
Mm-hmm.
and then it doesn't open back until I think Sunday, or maybe it'll open up for a little bit on Friday. But then after that, it'll probably be closed for the rest of the week. So,
Yeah.
yeah, so I'll probably be on, but I'm not going to be really taking any crazy trades or making any like calls for like like any big moves, because the last thing you want to do is enter a trade and then it's like in profit, and by the time you come back to your computer on Sunday, it reverses completely, because that happens all the time,
Mm.
especially after a holiday, because there's a lot of orders that are like pending during, like, say during the market close hours, and then as soon as Sunday opens, all these orders are going to flood in, and you're probably going to see price gap like super high or super low.
Yeah, I'm gonna just wait.
Yeah, no, it's best that way, because if that happens and you have a trade that you forgot to close, because like sometimes people don't know when the market closes during the holidays. If it gaps like that and there's slippage, I don't know if you have you ever encountered any slippage before?
No.
Oh, good. You don't want to encounter that, because your heart's gonna drop. Like when slippage happens, you'll have like a stop loss set, right? But the market's closed. So when the market reopens and the price gaps like super far out, you're going to be in that negative, and your broker is not going to close out your trade because it wasn't able to close it out that price. So your account could literally go to zero,
Oh, dang.
depending on what you're trading. Because I used to do that before. Like I think it was like a couple years back, maybe like 4 years back. I traded around Christmas and New Year's, and I left the trade open, and then it ended up gapping like I think 500 pips or something. And then I looked at my account, and it was like at like $10, and I had like 2,000 bucks in there. So I was like, oh, I should have just not traded. But
Oh no.
yeah, it depends on what broker you're using too. So if you're using like an unregulated broker like Hugo's Way or something, they won't honor your trade. But if you're using something like TD Ameritrade, like their Thinkorswim platform, they'll usually give you a refund. But if you're using something that's unregulated, like don't expect to get your money back, because they're going to be like, oh, well, that's your fault. You shouldn't have
Right.
had your trade open.
Well, that's good to know.
Yeah, definitely. All right,
All
cool.
right, you pretty much answered all the questions that I had.
Awesome. Yeah, definitely. Yeah. If you have any other questions, feel free to reach out, or we can have another session. Because I'm
Okay.
here. I'm pretty much here. If you need any help with anything, just feel free to reach out. But if you have any other like options questions, I think Samir would probably be your better option to go to for that. But if you have any other questions, I'm here to help.
Okay, cool. Thank you.
Yeah, definitely, no problem.
All right, you have a good night.
All right, thanks. You too.